Well, Apple is set to report earnings after the closing bell today. What should investors be looking for in those results? Well, joining us now to break this down and give us a preview of Apple's results is Alex Gunna, JMP Securities Senior Research Analyst and Managing Director. Alex, great to speak with you today.
Thanks so much.
So let's start with your forecast. What are you expecting, or what are you looking for in terms of earnings and revenue?
So we're looking for Apple to maintain the accelerated rate of growth that they established in the prior quarter, actually the prior several quarters. So the good news for Apple is growth is back in the mid-teens. We'd like to see it stay there or potentially move into the high teens. We'd like to see earnings growing faster than revenue right now, so high teens to maybe 20%. We're looking for iPhone momentum to continue into this quarter, somewhere north of 37 million units in iPhone sales. And what we're really hoping to see as well is the momentum in China continue. About 70% growth there last quarter. Hopefully they stay in that ballpark, maybe even do a little better than that, because expanding globally is a big part of this story now that Apple has gotten so large.
Certainly. And you just mentioned iPhone sales. We've seen huge numbers there. What are some of these? I mean, there's so many things to look for when you're talking about a company like Apple. What are the specific areas that you're going to be queuing in on? I would imagine iPhone sales, as you mentioned, China. What are some of the other things to keep an eye on?
Well, again, seeing earnings grow faster than the top line would obviously entail some margin expansion, so we're going to be looking carefully at gross margins. You know, the good news for Apple last quarter is what they showed is the iPhone market is not yet saturated in terms of the higher price points. So we saw average selling prices for iPhones expand wonderfully with the advent of the iPhone 6 and the 6 Plus with their larger screen sizes. So Apple demonstrated that they can achieve higher prices by delivering greater value. And so if we see average selling prices in the iPhones continue to accrete, that would be another dimension of good news that could come out of this quarter.
And so moving on, looking at these results for this quarter, but then looking at, I guess, longer-term outlook, where do you stand on the company, especially given all the fanfare that we're seeing over, for example, the Apple Watch? Now, I know the company said they're not going to break down the details of those sales, but where do you stand on that? And I guess, what are some of the other things to look at? I would imagine buybacks, dividends, some of these other areas that have been getting a lot of attention as well, right?
Yes, great question. And we do need to see some of those next chapters to this story emerge. We don't necessarily need it all on this quarter. Right now, it's really all about the iPhone 6 and 6 Plus. We're not going to get color commentary about the 6S, but that'll be coming later in the year. That's what's still central to this story, broadening the reach of the iPhone globally. I mentioned China, but there are other geographies as well where we'd like to see the expansion continue, because what that establishes then is the Internet of Things halo effect for other elements of the story. You mentioned the Apple Watch. JMP Securities is not necessarily that bullish on the Apple Watch this year. It's a necessary component of the story. We're glad to see them do it in an Internet of Things sense. But for us, this is a first step in a longer journey of establishing more wearables, more Internet of Things, more HomeKit, more Apple Health type of developments that can then layer in future and enduring annuity type of revenue streams. We'll hopefully get some color on Apple Pay, and Apple Pay is one of those revenue streams that can prove enduring beyond just the one phone to the next type of development. So those are the kind of things. Maybe we'll get some color on what Apple Watch sales were out of the gate, maybe not. We don't think it was all that blistering from the start, but still, like we said, first step in a long journey for Apple.
So given all of those points you just made, where do you stand on the stock ahead of earnings?
Oh, we're bullish. So JMP Securities believes that Apple, having achieved almost 20% global smartphone share, is at one of those inflection points like we saw in the past with Nokia, like we saw with Samsung, where they can really go from 20 to then 40% share in a hockey stick type of inflection that tends to happen, especially in a world where we do care about those Internet of Things facets, where if the best phone in the world is the iPhone, and it is right now, wouldn't it be nice to have all those other things falling into place around it? Your automated lock at your home or on your car, the kind of health apps that can be written. So with 1 out of every 5 phones or smartphones selling now being an iPhone. We think it's not going to be too long before it's more like 1 out of every 3. And that would be great news for Apple in terms of, again, not just the revenue and earnings that they can generate from those iPhone sales, but then the halo effect that will drive better Mac sales, better Apple Watch sales, better app ecosystem development. And then let's not forget the enterprise facet of this story as well, just getting started with their partnership with IBM. That could rekindle success and interest in the iPad line, where growth has slowed, and actually we've seen some contractions here recently.
Well, Alex Gunna, thanks for joining us today. Thank you for watching. I'm Morgan Brennan. Have a great day.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.